to get us started, we've already had a talk from Peter, so I'm not going to ask Peter to repeat himself. But I'm going to start with Mark and Christoph. Just take a moment and introduce yourself. Tell us about yourself for just a quick moment.
Okay, hi everybody. My name is Mark Foster. I'm the EU policy lead at the Crypto Council for Innovation. We are a global trade association. We're small by design. We only have about 15, 20 members. But we're the big players that are operating across multiple jurisdictions. And the interesting thing, I'm a policy person. I'm based in Brussels. I started my career in the European Parliament, worked for the British government in council, and the last kind of 10, 15 years on the private sector side. But what's interesting from my perspective is our members are from throughout the technology stack. So we have members that are kind of protocol layers, we have members that are stablecoin issuers, we have digital exchanges, we have VC firms. So we've got a good perspective, and it's a good overview for the interactions that I have on a daily basis with people like Peter and his colleagues.
Fantastic. And Christoph?
Cool. Paul, many thanks for having me here. Christoph Hock, I'm head of tokenization, digital assets at Union Investment, so representing the buy side here. And maybe to start with an anecdote, I've learned from you, Paul, and from you, Peter, that we have the big 10th anniversary party. Also about 10 years ago, that's when I started at Union Investment. I thought it's a brilliant idea. I was already on the blockchain topic myself. From my previous roles I've had as head of trading. And I've organized a workshop on blockchain technology at our firm. And I've invited about 300 people. I've had guest speakers from London at our Frankfurt premises. And then in the audience, I've had about 7 people being interested in blockchain and nothing else. About half a year ago, we've had a big event. We've hosted together with KfW, one of the biggest issuers on the on the bond side we have in Germany, and with Bundesbank. Similar topic, blockchain. We've had capacity for about 100 people, and we could have had 500 plus because there was such a huge demand. Saying that over the last 10 years, the world has changed significantly, so the blockchain technology is here to stay, and it's really about us as the stakeholders to adopt blockchain technology for the sake of serving our investors, our clients in a much better way. And several angles we are looking at when talking about blockchain technology. So on the one hand, we are a service provider to our clients. On the one hand, it's about wallet infrastructure. So how does the client interface of the future look like? In 5 to 10 years' time, will clients still go to branches? Probably not in a way they do it today. So therefore, wallet structure is really key. Then on the other hand, as an asset manager, we look at the product space. We are issuer of our fund shares on the one hand. On the other hand, we are investor into tokenized products, into crypto products. And the third angle we are looking at is technology. It's about basis technology, and that's where EY is a fantastic consultant to us. So we have a big project running, defining our technology infrastructure of the future, looking at tokenization engine, looking at smart contract management, looking at wallet infrastructure, looking at APIs, so how to make all this interoperable. So as I said before, blockchain technology doesn't go away. Key theme we have to focus on, and from our perspective, we are talking also potentially about disruptive technology. And just to share the famous words of the last CEO Nokia had, he said in a statement, we have done nothing wrong, but at the end we failed. And why did Nokia fail? Because literally they did nothing. They gave a laugh about Apple. They gave a laugh about Samsung and smartphones, and they didn't take technology development serious. And in the financial industry, we are sitting in the same boat. So we can be early adopters, we can be pioneers, we can implement this infrastructure for the benefit of our investments, being ahead of the curve. Or we can lean back, saying we have a fantastic financial infrastructure right now, we have to do nothing, but then we run the risk that we get at one stage into this hockey stick and time will overrun us.
Terrific. So the sort of homework assignment for the panelists on this conversation was really to reflect on, here we are a year into MiCA, 70 days into the Trump administration, and really we're probably like sort of 4.5 months or so into kind of the direction that was been set by the US election, and reflect on sort of the level of change and the transformation and what the tasks are ahead. So let me start with Mark. I know you had, I asked both Mark and Christoph to sort of prepare some remarks to go forward, and then we'll get into the Q&A part. So Mark, why don't you get us started?
Great, thanks, Paul. Yeah, I'm not going to try and compete with Peter on that, so I'll try and give you a bit of a context in terms of some of the political dynamics of 2024, some of the key aspects, primarily from an EU perspective, but also internationally, and then look forward maybe a bit more to 2025. So as a general matter, we need to remember that 2024 was a huge political year with elections pretty much throughout the globe. In India, in Europe, we had change in the European Commission as well as the elections in the European Parliament, and of course in the US. On the market front, of course, we had developments as well last year with the rise and the start of EFTs, and then also notable regulatory developments across the globe, primarily in the APAC region and in the Middle East. So lots of developments on the market front. Kind of volatility still to a certain extent in valuations, but generally a trajectory that was going upwards. And so we have kind of this two sides of both the market and the regulation evolving at a certain time. What I want to do is I'm going to just do back to school, kind of an ABC for 2024 and an ABC for 2025. So under the A, I put 2024 as application. Peter mentioned it, so I won't go in too much detail. 2024 was the year where MiCA started to apply. We had the stablecoin rules that we call EMTs, electronic money tokens, or asset reference tokens. Those rules applied as of the middle of last year. There's a whole series of rules around there about doing white papers, and Peter described a little bit the process. In terms of the other big chunk of the legislation, which is more like the market structure piece, was around what we call CASPs, so digital exchanges. The rules for those guys came in as the whole of the entirety of the MiCA legislation applied at the end of last year. So 2024, very much a year of application with our members on the industry side having a good understanding and certainty of what the primary legislation looked like, because that was actually concluded back in 2022, I think it was under the French presidency. But this was only starting to apply really as of last year. B for 2024, banking relationships. We touched a little bit on banks and the interplay between the crypto native guys and the banking sector. One of the kind of ongoing problems in some jurisdictions has been the ability to have just basic banking relationships. We had the choke point 2.0, the infamous situation in the US where there was a sense that the regulators, under the pressure from the governments, were pushing back against the ability for crypto industry to be able to have access to basic banking services. We had similar concerns in other jurisdictions as well. I think in part thanks to MiCA and the work that Peter and his colleagues have done, that gave some reassurance in the European markets at least that there was a regulatory space around these activities, and that made things easier. And little by little we've seen the nature of the banking relationships evolve, and a certain openness from the traditional financial actors to get more comfortable with crypto. And that also feeds into some of the comments we were making earlier about institutional adoption and how the regulatory regime can help with that. C, consultations. I won't bore you with EU lingo. We have the primary legislation, which was MiCA, which I think the industry very much welcomed, brought a lot of financial certainty, and was by and large very good. A few mistakes, as Peter knows, because of the nature of how we negotiate between the different institutions at European level. But last year, there was an awful lot of consultations. This is when we have what we call the secondary legislation in Europe, so the European Banking Authority, the European Securities and Markets Authority, putting down a ton of additional rules. We as industry try and input into that process. We submit written questions, there are hearings, but frankly, it's a huge amount, ranging on topics as broad as ESG reporting requirements, suitability frameworks for staff, the capital requirements piece, there's been discussions there as well. So yeah, there's been a lot going on in 2024. Also noteworthy and often forgotten, MiCA is an important piece of legislation, but also last year there was the DORA, which is the Digital Operational Resilience Act, and there was the Transfer of Funds Regulation, which is the EU implementation of the travel rule. It's really important to remember that obviously beyond just MiCA and beyond just stablecoin legislation or market structure legislation, there's a whole series of other things which affect the industry, and these are the things that we discuss regularly with policymakers. Moving forward to 2025, so ABC still. The A for 2025, as I see it, is authorization. Again, Peter touched upon it. Our members and some of the larger operators in the EU are going through this quite painful process sometimes of getting authorization, getting the authorization requirements they need from the national competent authorities. That's a very important process. It's a very time-consuming process, but it's one that ultimately we really need. It brings credibility to the market players that have this stamp of approval. As Peter mentioned, that also provides a passport to be able to operate internationally, but it's a national process. So we have different national competent authorities with different grandfathering regimes, different timelines, which sometimes add some complications, and you can question whether that makes the EU single market quite as singular as it could be. Under B, Basel, again, happy to take questions on that in the afterwards. We've already mentioned it a couple of times, but the very prohibitive capital charges are a problem. We in Europe front-loaded quite a lot of that, unfortunately, in the Capital Requirements Regulation, which is the EU implementation of the broader Basel framework. There's a sense that perhaps the Americans, and Peter alluded to it, might not be so forthcoming in applying the Basel rules in future. So what does that mean in terms of an international level playing field? And how will that impact markets when you look at development of tokenized assets? That's definitely something that we're working on. The European Banking Authority currently have a consultation on that in terms of trying to harmonize the rules that are kind of transitional at the moment from that piece of legislation a couple of years ago in Europe, but there's also potentially a future standard to come as well. Question mark, what will happen with that? C, competitiveness. We didn't touch upon it so far, but the big difference between 2024 Commission and Parliament and 2025 Commission and Parliament is the importance of a competitiveness gap and innovation gap. This, you may remember, Mario Draghi came up with a report on this, 400 pages, very critical, in my view, of a lot of what's happened in Europe and a pathway to how things could be improved. The European Commission came out a couple of weeks ago with a communication on the Savings and Investment Union, which is a bit of a blueprint as to what could be done differently in the course of this year and coming years over this legislature to try and improve the competitiveness of the EU. And there's not too much specifically on crypto in there, but there are two pieces which are interesting. One, which is the market infrastructure piece that again, Peter touched upon, and the idea of how new technologies or DLT can play a role in a lot of the future market infrastructure. There's also a sense that the DLT pilot project, which is again is a bit of a sandbox, if you like, how that could be enhanced and revised going forward. And then the other one is the idea potentially of a European level supervision for CASPs, so digital exchanges. For stablecoins, there is a process already within MiCA whereby for smaller ones, the supervision is at national level. For larger ones, potentially in the future, it will be at European level with the European Banking Authority having that role. But when it comes to the CASPs, there was nothing in there in MiCA. So this is something that some policymakers are already suggesting might be a step towards what Mario Draghi was suggesting in terms of a more harmonized supervision at international level. I don't have time to go through the entire alphabet. I think you'll be pleased to hear. There's a couple I will just touch on. DeFi, D for DeFi, we mentioned it as well. From our perspective, I fully agree with what Peter said. Not a huge market yet. Where's the market failure? Where's the problem? Let's not necessarily look for a solution where there isn't a problem to be found. G for Genius Act, the modestly named American bill, which is, if you put that together in terms of stablecoin legislation and potentially
I'm
market
told the final
infrastructure.
package is going to be referred to as the Stable Genius Act.
A Stable Genius. Okay, well that's very good. I think it's from our perspective, our members are very supportive of legislation. We think meaningful legislation in the US is essential in the medium and long term to be able to ensure a kind of certain amount of harmonization at international level, given so many other jurisdictions have developed things. So that will be important, whether that's just on stable coins or it's a stable coins and market infrastructure at the same time or slightly delayed will be interesting. And then finally, taxation, something that people rarely touch upon. Nobody likes taxes, is the only thing that's certainty with death and taxes. I can't remember who said that, but we do need to think about that. There's obviously a lot of work being done at international level when it comes to exchange of information between jurisdictions, and in Europe we did the DAC 8, which is the legislation implementing those rules. But I think as we move forward, particularly in the constrained sense of public finances being not necessarily the strongest, taxation will always be an important issue, and it comes into level playing field to a certain extent. So I think that will be one to watch for the future. I'll stop there, Paul. Thank you.
Excellent, thank you. And I want to give a few minutes also to Christoph to kind of give some opening remarks if you want to have some additional ones.
Yeah, many thanks, Paul. Where do we stand right now? What will we see in the current year? So I'm quite often asked, why do we have such a slow adoption of blockchain technology in the financial space? Why are we not advanced in a further way? And I guess, Paul, you've illustrated in a pretty good way when talking about technology innovation. Typically, you have a kind of slow start, and then at one stage you go into a hockey stick movement. And when I think it's important when looking at blockchain technology, we are talking about Web3 in general. So it's a kind of further evolution of the internet as we know it from the 90s. We've had Web 1.0 at the end of the 80s, beginning of the 90s, slow adoption. Why do I need the internet? My line is pretty unstable. It's a pain to get online. I get my daily mail. Today, we couldn't live without the internet. When looking at Web 2.0, similar development, take Amazon, questions came up, why should I purchase books online? I have my bookshop here next to my house. Also, when Google came up, there was a big question, how on earth will Google ever monetize this business model? It's great to have a web browser, but how can they make money? Today, looking at Amazon and Google, we know they are multi-trillion-dollar market cap companies, and they belong to the large cap tech firms we have on a global basis. And similar, looking at Web 3.0, looking at blockchain technology, so focusing on the financial sector, we after the Lehman crisis back in 2008, we've built a robust infrastructure. We have a functioning infrastructure. And I think what's also important, financial industry is pretty much centralized. We have a decent number of oligopolies. We have a decent number of big players making decent money based on the existing business model. Will these players take CSDs, take data provider, take secondary market providers? Will these guys be happy to support immediately implementation of blockchain technology? Clear answer is no. On the other hand, we face, as mentioned before, the risk when we do not adopt new technology, you might be late and you run into a Nokia-like situation that you are sleeping and that at one stage you are out of business in a couple of months' time. So that's where we stand right now. And I guess looking at 24 from a buy-side perspective, from a financial market perspective, we've seen pretty good progress. We've had regulation which was even more clearly defined here in Europe. We've had MiCA 2, where it was clear that it's applicable for the traditional financial instruments. Looking at secondary markets, which will play a key role for trading traditional financial instruments in continental Europe. We've had the DLT pilot regime, which went live. 23, we got the first licenses in 24, at least for one company, for one trading and settlement service company. In the UK, we have a similar digital security sandbox, which will allow secondary market trading from this year onward. And looking at the dedicated crypto space, Peter was alluding to MiCA got fully live beginning of 25. We see a number of CASPs coming up. I guess at the moment you have two kind of business models which are kind of profitable from a couple of months onwards. It's offering a trading platform for crypto assets, and on the other hand, it's issuing stable coins in the given yield environment. And so therefore, we could expect further evolvement of the market with a dynamic pace, just when looking at the number of accounts being opened at crypto asset service providers nowadays in 25. We have first licenses here in Europe for MiCA regulated stable coins, more to expect. And also for us as an asset manager of high importance, we will see more traditional financial instruments being issued and being traded. Last year, we've had the exploratory phase from the ECB, our central bank here, where we've had about 50 plus use cases. We've had most recently the announcement by the ECB that they will come with a wholesale, not to mix it up with retail, wholesale central bank money, so wholesale CBDC, which will be an important step in the payment system to have an equal level playing field. So from our perspective, we are getting closer to the hockey stick, and it would be a wise decision to be on this topic and not to stay aside.
Terrific. So I got a couple of follow-on questions, and I think I want to direct the first one to Mark and Peter. You think about sort of regulatory environments and what works and what doesn't around the world. There's the U.S. obviously is a work in process, but for some time now, we have seen a lot of activity in other jurisdictions: United Arab Emirates, Singapore, Japan, Australia. From your perspective as regulators and as people involved in policy with a bit of global point of view, tell us a little bit about what you see in other jurisdictions that's worth emulating or is done particularly well. The two big, I think of the U.S. and Europe, because crypto is generally not allowed in China. The U.S. and Europe are the big two markets, but there are a lot of other smaller markets that have some clever jurisdiction and regulation. So maybe I'll start with you, Peter. I know you talk to regulators all around the world. What do you see as particularly worth emulating in other parts of the world?
Well, actually quite a lot, because these countries, on the one hand, are inspiring themselves on MiCA, but are trying to avoid the mistakes in MiCA, and that's clever. So we have, in this case, first mover disadvantage, and so they improve on that. And this is very important for us to watch where they're going, because these crypto markets, tokenized markets, are global. Once you decide that you want to invest in tokenized assets, you can be anywhere, and you can buy them anywhere. And if they get their act together, which it looks like they will, it's quite possible that especially institutional investors, European institutional investors, where the real money is, it's not the retail level, where the real money is, that they will start transacting not in the EU as we wanted, but that they'll start transacting in the Middle East, in Singapore, in Asia, or, and this is my view, is that if the UK and the US get their act together, that's where the business will go.
Mark?
Yeah, I mean, I think from my perspective, I mentioned APAC and the Middle East as well earlier on. In the Middle East, they have set up, kind of dedicated supervisor. They've created from scratch and from nothing.
You were talking about Vara.
Yeah, exactly. Whereas, we in Europe are often kind of struggle sometimes in terms of working out, well, we'll give this to that guys and we'll give that to that guys. And it's not always necessarily the best way. It's very difficult to get the level of experience and expertise that you need as a supervisor for some of these new technologies. And that's the truth the world over. But, that idea of saying, okay, we're going to create something new and something different in recognition of this is quite a refreshing way of looking at it. In the APAC region, we're seeing whether it's Japan, Singapore, Hong Kong, we're also seeing something which I think in Europe is quite interesting. We tend to have, we do try and have proportionality as one of our main ideas, and subsidiarity. These are overarching principles to make sure that, the bigger you are and the more systemic you are, the more robust the regime. And I think that's natural and appropriate. But sometimes we forget that for the smaller players, proportionally, it's much more difficult to even meet those lower level barriers. And sometimes that has a chilling effect on developments within the EU market. I think in APAC, they're looking at perhaps doing that in a different way, talking about how you can have intermediaries sometimes between either the CASPs and some of the other operators in the ecosystem. I'm not saying that's something Europe should emulate, but it's an interesting way of looking at things with the mindset of trying to be a bit more flexible, a bit more nimble, and also recognizing that, that depending on how big the company is, the regime might need to be slightly different to recognize that.
Very good. So, Christoph, we got two regulators here, right? You're an investment firm. You have a slightly different perspective, which is you've got customers, they can put their money anywhere pretty much, especially very sophisticated investors like family offices and big pension funds. They can invest anywhere. Are they buying, to the extent that there are tokenized assets available in Germany, are they buying them in Germany? Are they going somewhere else? What are you seeing in terms of like this sort of global competitive marketplace for crypto and digital assets?
I think regulation is really key to have a trustworthy environment where our investors can act. From our European perspective, in Germany we have a tale called the Sleeping Beauty, and it's a bit like looking at the US. So for the last 5-6 years, literally nothing happened under the Biden regime and under SEC's Gensler. You've had kind of adverse movements, and now I think the Americans they will get it done in 6 to 12 months time. What they missed over the last 5 years. So I think the US really will speed up, and from a global competitive perspective, I think it's helpful really to bring dynamic in the entire blockchain universe. So looking at our investors right now, I think it's really to differentiate. Are we talking about digital assets, so tokenized traditional financial assets? So that's one area where we are focusing on: tokenized bonds, tokenization of fund shares, tokenization of stocks, which will follow at one stage. That's one area. The other one, I guess it was you, Peter, making use of the term real-world assets. So what we understand when talking about real-world assets is typically asset classes, especially where retail investors can't invest in nowadays. So take alternative assets like private equity, private debt. Take infrastructure, which is extremely important from a European perspective. Look at the Green Deal, look at wind parks, look at photovoltaic farms. These needs to be invested, and set up, and huge amount of investments will be needed. In the Draghi report in Europe, we were talking about 800 to 900 billion euros over the coming years. And I guess by having public-private partnerships, these type of assets, alternatives, real estate, infrastructure would be ideal for retail, for long-term investments. And looking at tokenization, I guess one of the characteristics is fractionalization. And via fractionalization, you can offer in very small shapes monthly savings plans, 100 euros, 50 euros, investing in these type of products. And therefore, RWA will play a key role going forward. And then obviously the third bucket, so traditional RWA, third bucket is crypto assets, which is the kind of nucleus of all. You mentioned Bitcoin beforehand, Paul, what we are talking about. But from a global market perspective, it's really the smallest products of the entire universe. So at the moment, we are talking about $3 trillion US. Just look at market cap of Apple or Microsoft. Each company is as big as the entire universe of all cryptocurrencies. So these are the three areas we are looking at. That's where we are structuring products. We are currently working on tokenization of fund shares. We as an asset manager, we are investing in tokenized products like tokenized bonds together with KfW. About 2 years ago, we started structuring their first tokenized bonds, where we worked 15 months in a strong collaboration with this issuer, building this product from scratch. And also in the pure crypto space, we have offerings. From a reg perspective, some limitations. So most of our retail funds are labeled under UCITS, and for UCITS funds, we can't invest in native crypto products. So we have to make use of Delta One certificates, Delta One wrappers as a workaround to offer these products to our investors. Last year, we've just put a product on the shelf to have one ready, and without any marketing activities, we've had 3-digit million investments from retail in this product. So for all three, I would expect decent demand over the coming years.
Fantastic. Well, we almost have to wrap up. I want to give Peter and Mark one last quick moment each. If you look back on the last year, what is, Peter, maybe what is your single kind of biggest lesson learned or insight over the last year?
Well, it's a confirmation that the US will always come around and will do the right thing after trying everything else.
This will going to happen everywhere.
And if they get their act together, we will have some catching up to do. That is the insight I have. So we should not be complacent, thinking that we're ahead, because we're not.
Mark?
I think I'd say that the dialogue between the private sector and the public sector is important irrespective of which jurisdiction you're in. Ideally, our members are the big global players, so we always advocate to the extent possible for globally consistent rules. But an openness and a willingness to have that conversation on the policymaker side for people like Peter and his colleagues to listen, to learn, to try and understand, to make informed decisions. It's their choice to make the political decisions about the legal frameworks, but you can't do that in a vacuum, and you cannot do that. You will only make, I would say, poor decisions and bad regulation if you don't have that two-way dialogue. So that's something that we're working hard in Europe, but also globally to be able to make sure that we can have that engagement.
Thank you. So thank you to our brilliant panelists.